Hello everyone and welcome to another market snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. I hope everyone had a very good weekend. To those in the US, I hope you're enjoying the extra days holiday. This is the first video we've done in a few days, so I'm going to try and cover as many charts as I can without hopefully the video lasting too long. It's been a pretty slow day, I'm not going to lie. It's with the US bank holiday, this can often be the case. We've also had a significant lack of economic data or events. The one headline story really has come from the UK. We've seen the pound sell off quite strongly so far today. On ahead of Theresa May's speech tomorrow, she still hasn't told us what time that'll be, but she's expected to discuss not necessarily an in-depth Brexit strategy, but it is going to be a press conference regarding Brexit. This again has stoked fears that what she's actually going to outline is plans for more of a hard Brexit, more so than a soft one. We've heard previously that the focus is on immigration and regaining control of law making, and therefore this will be a priority more so than access to the single market, which is when people start to talk more about a hard Brexit. A soft Brexit is seen as finding a way to retain access to the single market. The opposite end of the scale is a hard Brexit, whereby we lose access to the single market and we start talking about the prospect of tariffs being imposed. So it looks like we're heading more towards a hard Brexit. But again, as I've said before, this isn't a binary outcome. It's not hard or soft. It's probably going to be somewhere in the middle. And I would imagine it is going to be more towards the hard side, simply because we can't have single market access without the free movement of people, which I think was quite clearly what people voted against, and Theresa May has already acknowledged that. One of her spokespeople also did say we are expecting a market correction following her comments tomorrow. Now, whether that the market has taken that to believe further declines for the pound. I do personally wonder whether they're actually referring to a correction of some of the losses we've already seen. I think that'll be very interesting to see tomorrow if the markets have misinterpreted that, because that would leave a lot of upside potential for the pound. But again, I think there is going to be a lot of volatility around the event, and given the stance which people are expecting her to make, you do I wouldn't like to necessarily speculate right now about which way we could see the currency move off the back. What I will say is that we have seen a lot of selling already in the pound, so I think it may take something quite significant to put significant downward pressure on the pound at this stage. The offset of that obviously being in my best attempts, obviously, to sit on the fence. The offset of that obviously being that the market is very sensitive to fears of hard Brexit and therefore doesn't always act rationally. Now we're going to start with a few sterling charts, given the fact that that is the only topical subject today. Here you can see cable. We saw it break to the new back to flash crash levels. We saw it break below this support of around 121, which is held on a number of occasions recently. We've broken back below 120 at one stage, so we are back at these flash crash lows at this stage. Down here being the 31-year low that was set back in October. It's hard to, from a technical standpoint, to make too much I wouldn't say make predictions. It's hard to identify really important support and resistance zones and possible where the currency pair could possibly be headed, because quite frankly, this is very much going to depend on how on what Theresa May has to say tomorrow, and at that point, it almost throws what levels I do highlight. They pale to insignificance. What I will say is this 123 does still appear to be a significant upside resistance beyond here around the 125s. If we are looking for levels, the fact that we're back at these below 120 levels shows how pessimistic the market is. And after that, I always do just pay attention really to these round numbers, because this was such a sharp move. It doesn't offer as much in terms of support and resistance. So we fell to around this one, just below 120 at this stage. Maybe if we pull back to around these 119s, 118s, I think it would take something quite dramatic to get us back towards these 116s, if I'm perfectly honest, especially tomorrow. But it's very hard to tell, I must say, ahead of this decision. Euro sterling, you'll note, has moved away from this head and shoulders. Now, we highlighted this previously, had the two shoulders on this left hand side, the head in the middle, possible one right shoulder here. It looked like we were headed for a second. We had this nice little reversal candle here, the shooting star candle on an important resistance zone, with the moving averages also coming into play. So it did look like we were heading back towards this 82.50, 83.50 zone. But instead, we've taken off to the upside, this sterling weakness really shining through. We've broken above those previous highs, so in effect, this double top now does pretty much mean nothing at this stage. There is a failed double top. We've run into resistance here around the 88.50s, 88.80s. This is prior support on these areas here, and we've had a little bit of profit taking at this level. I wouldn't be surprised if we see a little bit more profit taken ahead of the speech tomorrow, just simply because of the type of kind of volatility that we can expect ahead of the event. If we break through these 88.50s, 88.80 level, then I think really the next major resistance comes around these 91.50s. Possible resistance coming around 90 to 90.50 as well, this prior area of resistance. But again, ultimately, I think it's just gonna be so dependent on what Theresa May actually has to say on the topic, that it's even more difficult than normal to try and highlight important levels of resistance for the pair. I'll highlight a couple of notable recent levels, which could offer some insight, but ultimately it's so dependent just on what Theresa May does say at this press conference tomorrow. Sterling yen I'll do next before I move on to other currencies. And sterling yen, we did see a considerable drop. Now, what I find very interesting about this pair in particular is the fact that, unlike with dollar yen and euro yen, if I'm not mistaken, where we've come back to here around these 136s, is actually the bottom of the Ichimoku cloud. This is the cloud that we broke above back in November. We broke through the moving averages before dipping back below. We hit resistance on the top level of the moving average band here around the 144s, and then came back, and now this is a major test, because as long as we remain above the cloud or in it from the top, then this still remains bullish. But now we're trading back around these 135.50s, 136s. We've got the 55.89 moving average band offering support here. We've got the Ichimoku cloud. If we rebound higher, that's a bullish confirmation. If we break lower, that could suggest that there's a lot more doom and gloom to come for this sterling yen pair. It puts us back into bearish territory, and we'll be looking for confirmation then from that, with the lagging line possibly following through as well. So very interesting levels that we're looking at now currently for sterling yen. Now, sticking with the yen pairs, let's take a look at dollar yen. Now, dollar yen, as I say, we're still above the cloud. We're still comfortably above the cloud. I do think there is potential here for some still for a little bit more downside. I think a continuation of that correction, I think, is still very possible here. Looking at this now, what I would say though is we are now on a 6-day losing streak for dollar yen, so potentially we may see a bit of an upside. We could potentially see some profit taken on these short positions, potentially see some upside moves off the back of these lows. You'll note here that I've highlighted the double top which we had here, which is basically completed. We fell to 113.62. I had about around 113.50 on here. These things are rarely perfect, so the fact that we've come back to these, I think this is a completed double top now, and that could potentially mark the end of the correction. Who knows? But we have now seen 6 consecutive days of losses. You can see these nice long lower wicks, this potentially suggesting that we are seeing a little bit more buying interest around these 113.50 levels. Should we see a break below them, below that level, then I've got my eye keenly on this 111.50. This is a prior zone of support, and this is where we start to come into contact again with that Ichimoku cloud to the downside. But I think the level I'll be watching next, if we do see a move up to the upside, is going to be that 115 level. That's a prior zone of support on the way down, and that'll be the test now. That'll be the next test, I should say, of whether we're going to see more of a correction in the US dollar, or potentially see a continuation of that move to the upside. You can also add a fib retracement level here, and the 50% retracement level comes in around that 116, which was the neckline of that double top as well. So a couple of interesting levels potentially for the dollar yen pair. Next up, Euro Yen, and we have seen some downside in here again, but again, we still remain comfortably above the Ichimoku cloud, which we could potentially be tested in the coming days or weeks. We've found support around the 121s at the moment, which is this prior area of support. Now, I know this isn't a perfect double or triple top, but you could see it run into resistance around these 123.75, 124s on 3 different occasions. The neckline coming in here around the 121.65s. We broke below there, potentially suggesting we're going to see another, if you're taking the same ideas that you take when using double tops, assuming that the same rule applies here, and in my head, I don't see too much of a difference if I'm perfectly honest. You would expect you would possibly look to see a move from around 123.75 through 121.75, so possibly signaling once we broke below this neckline another 200 pip move, which would take us back to around 119.75, 120, potentially a psychological level here, prior resistance as well. So I think we could potentially see more downside in the euro yen pair, is what I'm saying. Again, these numbers are never precise and they're never you can't I'm not saying that this is what we will see, but using the same logic, I guess, as the textbooks have on for double tops, this is what we could possibly see as we move back towards around these 120s. So what I'm saying is, I think there is some more downside potentially still to come for this euro yen pair. But once we get towards the 120s, this is when we are approaching the Ichimoku cloud again, and that is where we start to get a test of just how much of a correction this is, or whether it is actually a bearish reversal. While we're on the euro, let's take a look at euro dollar. Now we have continued to see a move up to the upside here, but again, this 106.50, 107 level has just offered some resistance, and now actually today we are seeing a rotation lower. You can see I think this is the 55 period simple moving average here, providing some resistance also for the pair, as well as that previous level of resistance and the 61.8% retracement of the move from the December highs to the December lows. Sorry, to the 3rd of January lows. The fact that we've seen a rotation off of that resistance level suggests to me we are potentially looking at a move back to the downside, a continuation of this longer term downtrend here. If we do see a move back, I'll be interested to see how we respond around these 105 levels, prior area of support and resistance, although potentially not a major level of support and resistance, because while we have seen it respected a bit in the past, it hasn't been a perfect signal, I should say. Then around 104.50 potential support being the most recent low, but ultimately, if we do see a move below these 105s, I think we could be headed back potentially to around these 103.50s, which is the multi-year low for this euro dollar pair. Let's do a few commodity currencies. Start with Australian dollar versus the US dollar. Now, I highlighted this 75 level previously. This continues to provide resistance. In fact, we've actually seen a rejection at this level again, and we've seen it pulled to the downside today, coming back as low as 74.50s. Now we have seen a bit of a bounce off that low. I'm going to nip down to the 4-hour chart here, because you can see I've got a rough trend line on there, and it doesn't look like it means much at this stage, but if we look at it on this 4-hour chart, what it really does is highlight this 74.50 levels as a potentially important level, because we've got this trend line here which shows the moves from basically from the start of this year, and we've seen this gradual rise up. Now this trend line actually crosses the most recent lows around these 74.50, so that suggests to me that this 74.50 is a very important level of support. A movement below here would suggest that things have turned more bearish, and we could potentially be looking, I don't know, just off the top of my head, potentially looking at a move back to say these levels here around the 74s, 73.80, 73.75, 74 levels, which has been a most recent area of resistance, but you can see it was also an important level of support back here as well. You can see the fact that we're seeing the rejections at lower highs would suggest that this is a bit overheated to the upside. The fact that this is such an important level makes it a logical profit taking level, and that looks like that's what we're seeing so far. Now, that's not to say that we won't see that level broken at some point, but what it suggests to me is that we may just be entering correction territory following this long run up here since the start of this year. Let's have a look at dollar CAD next. Now, you'll notice straight away here what's happened in dollar CAD. you can see that we have finally seen a break of this rising channel. We had the rising channel here. We had the initial sell-off here in dollar CAD. Then we had this rising channel up onto the 50 fib, which is the 50% retracement of the highs on the 20th, the highs of last year to the lows of last year. We hit the 50 fib on 2 occasions around 136. And then we've pulled lower. We've finally broken below this rising channel and come back to around these 130 levels, and now we're testing the bottom of the channel as resistance, and as of yet this 131.75, which is also prior support, is holding as new resistance. Should we see this rotate to the lower back down again, then it could open up and move back towards these 130s, and that becomes the next big test. A break of here, we could be looking back towards around these 128.25, this most recent level of support below these 130s. So things potentially taking a bearish turn for the dollar versus the Canadian dollar. Final one is New Zealand dollar versus the US dollar. We've been continuing to this grind higher up until these 71.50s. Now at this 71.50, we've run into the 38.2% Fibonacci retracement level. We've also got the moving average band of 55 and 89, but we've also got a channel, a descending channel of our own here, coming in just above here around the 71.60s, 71.70s. And the fact that we've seen a rejection of this level potentially suggesting that we are going to see a move back to the downside. But what I do find interesting is, though, we are still trading above Friday's opening levels, and we never took out the lows. That potentially for me is a sign that we're going to see some another test of this upside. But as always, this candle's not completed yet. We're still on this is still today's daily candle, and anything can happen in the next few hours. So this is something that we're keeping an eye on. But the fact that we made new highs in the day, failed to make new lows, and are currently trading above the opening level from Friday suggests to me that there's still more to come from this, and potentially a little bit more upside. But ultimately, we are still in this downward channel here, so I wouldn't be surprised if we did see a rotation back to the downside, with this 69.50, 70 level obviously still being extremely key. I'm going to finish with oil and gold, and a little bit of Dow. Oil, I mean, there's not really too much to update on in oil. Now, you'll see every day we do see these ongoing reports over and over again, the same thing. Oil's higher because there's doubts about the deal, about people complying with the output cut deal. Oil's trading oil's trading lower because people are concerned about the people complying with the deal. Oil's now trading higher because people are cutting in line with what they were meant to do. Oil's trading lower, and so on and so forth. I'm not really interested in the intraday moves, and I don't think mostly they're being driven by anything other than normal trading conditions. What I do see here is we've got 52.50 here to the lower end, which is offering some support and has been for some time, and up here we've got around 56s. I think we're range trading. I think traders are waiting to see what kind of compliance we get with the output deal, and that will determine whether we break higher or lower. If we do get full compliance, and so far so good, then I think we'll see a break through that 56, potentially headed back towards 60. Any sign that the deal's falling apart, and then we could see a break below these 52.50s and potentially heading much lower, with $50 being the next psychological barrier here for Brent crude. The same applies to WTI crude, except you've got $50 to the downside, maybe 50-50, and to the upside you've got around these 53.50s, 54s, and again, we are just range bound as far as I'm concerned here. You do get the occasional peak just above or just below these levels, but in reality, you look at this and we are broadly range bound, and I think we're going to remain that way, at least for now, until the deal looks like being completed, or until it looks like compliance is falling short. Gold I find very interesting right now as well, because we have traded above 1200 a little bit, but we continue to run into resistance around these levels. Now, this level is important because we quite often do trade in this $50 ranges with gold. So 1200 is a notable potential profit taking or resistance level. The fact that we've entered into the 55.89 moving average band, which of course is pretty wide at this point. We've also got the 38.2% retracement of the move from the November highs through to the December lows, makes this just again an increasingly important level of resistance. Now, at the moment, this is holding. If we look at the 4-hour chart, you can see that we've made a recent high now. We've got another shooting star candle despite making the high, and the high was made on significantly lower momentum. That suggests to me that this is looking potentially a little bit toppy at this stage, but I guess these things can look toppy for as long as they wish. The signs are here that we are potentially going to see a rotation back to the downside, but if we do see a breakthrough those levels, then I think 12.30 then could be key. Now, I know that's not in keeping with what I say about moving in $50 ranges, but the fact that that's a 50% retracement and you've got the top end of this 55.89 moving average band would make that stand out to me as a notable area of resistance for gold, and above that would be around these 1250, 1255 points. But for now, I'm really focused on these 12 to 1205s really, because at the moment it looks like momentum is falling out of this rally, and it has been quite a strong rally, to be fair, off the back of these since the middle of December. So any form of correction at the very least really wouldn't come as a major surprise to me. I am going to wrap things up with a Dow because we have continued to see sideways trading. Of course, it's bank holiday today in the US, but just a couple of notable levels. Of course, 20,000, everyone knows 20,000. 20,000 has been reported, and over-reported. Below here, we've got down 19,700. We've got kind of a double top forming here, so this 19,700 would effectively be the neckline, or the actual level is around 19,716. A break of that potentially signaling a sharper correction based on the fact that this is a 300 pip range, a 300 point range, potentially signaling a 300 point move to the downside, which would open up a move to around these 19,400 levels. And again, that could trigger a little bit more negativity because things have been looking so toppy, and because people are starting to question whether these levels are justified, having not been backed up by any details on a fiscal stimulus program from Donald Trump. Then we could be potentially even be looking as far back as 19,000, but for now it's 19,700, with below it coming in at 19,400. I hope you all enjoyed that in-depth look at the charts. Again, any feedback is always welcome, both positive and negative, hopefully constructive. And if you want me to add any more charts, then please do just ask. Apart from that, hopefully I'll be continuing to post these very regularly, aiming for daily, but sometimes other things dictate. But I hope you all enjoyed that, and hopefully you'll hear from me once again tomorrow. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.